Hi guys, my name is Marcel and I'm the moderator of today's panel discussion. We will speak about the integration of digital assets into the established capital markets. Before we start with our agenda, I would like to ask everybody in the call today to introduce himself and give us a short overview of what the company he presents today is doing. Jonathan, would you like to start?
Sure, thank you very much, Marcel. So my name is Jonathan. I'm CMO and head of platform strategy at Swire. At Swire, we develop software for a regulated decentralized financial infrastructure. So we provide regulated financial entities with software to create a joint blockchain network to settle any kind of digital asset or as well traditional asset.
Thanks a lot. Enno, would you like to follow?
Hi, my name is Enno Henke. I'm the co-founder and co-CEO of Hubstocks. We're the first company that offers equity as a structuring vehicle, and we already made it possible to structure any alternative asset in form of a fully regulated and tradable share. We created a fully regulated banking infrastructure to make our product as visible and as much credible in any way possible. And so we tried to provide to professional and retail investors a holistic financial product based on the blockchain.
Yeah, great to have you. Markus?
Thanks, Marcel. Hi, I'm Markus. I'm a senior manager with Define. Define is a consultancy in the financial industry. So within Define, we have a dedicated blockchain unit, and we're helping our client to conceptualize and implement everything about capital market infrastructure, starting with crypto custodians, going to crypto security registers, and so on. So that's from my side. Back to you, Marcel.
Thanks a lot. And last but not least, Jürgen.
Thanks, Marcel. My name is Jürgen. I'm working for WM Datenservice. In this role, I'm responsible for business development in the area of blockchain and digital assets. This area is very strategic for WM Datenservice, and my focus at the moment is to create innovative data products and services enabling the exchange of data between the digital market and the traditional financial market. WM Datenservice is one of the leading information service providers for the financial industry in Germany. We have experience over 75 years in financial data. We are the national numbering agency for the akin in Germany, and we are also one of the largest issuing agencies for the LEI, the legal entity identifier. We provide reference data on financial instruments in high data deeps. What does it mean? WM Datenservice supports the financial markets with data describing the instruments, as well as listing data, tax, statistic, and regulatory issues. And we have issued the first products according digital assets.
Thanks a lot. I think if we speak about data and WM Group, I think they're playing a really important part. And of course, we live at the moment in times where it moves really fast, where we can see a lot of interesting developments in the market. Jürgen, maybe the first question to you. How fast do you think can securities be integrated into the market?
Yes, I think the infrastructure to integrate them is already there. If you see banks, they have sub-custodians for a long period, a long time, and everything a sub-custodian can book into the securities account, the banks can mirror into their existing infrastructure. So yes, we have some issues of interfacing with sub-custodians as a crypto custodian and so on, or a crypto registrar, but in the end, the infrastructure is there. Also, the data needed to manage all these digital assets is already in place. Most of them, others are in the pipeline, and we have also many infrastructure components to connect both the traditional financial industry and the digital markets. And so my company, WM Datenservice, we are delivering a service for the infrastructure to transfer issuance data from the traditional issuers to the digital ecosystem. And so I think we have a lot of this infrastructure. It might not be very comfortable. It might not be very effective if we think of digital assets, because they are the special cases in the actual infrastructure. They are handled sometimes manual. And so, yes, this has to evolve. But I think it's foreseeable that efficiency will gradually increase, and at some points we can see this movements and improvements.
Thanks a lot for the insights. I would like to open up this question to the others. Are there different kind of views from the other?
I have a little bit different view here, because like I wouldn't say all the infrastructure is there. I mean, I think a big chunk of infrastructure is already there. But you first need to development base layer. And this is like what banks and fintech startups are already doing and have done that in the past. But there's still a lot of development going on. That's what I've observed. A lot of projects, start building a crypto custodian, building some services on top of it. Now, recently start with crypto security registrars, and there's a lot of work on the base layer, on the access layer to the assets. I would say what Jürgen had said, okay, maybe on top of that, there's a lot of stuff, already there, a lot of you can use backup process and all these things and reporting pipes. But also for trading, it's maybe already there and you just have to integrate a little bit. But the base layer, I think, is the essential part, which you still have to build and which you have to integrate with services upstream. And additionally, I think evolving over time and looking into digital assets, there will probably a certain shift of certain processes or part of processes within the digital assets, because they are more like applications and they can also have their own mechanics. And I think this won't be only integrations, will be also some kind of processes were going down, think about coupon payments, dividend payments. I mean, I think initially you will go in an easy way and doing trigger solutions or similar things. But I think in the future, a lot of stuff will be built in, and it won't only be a kind of integration exercise. There will be also more, implementation wise, some stuff you have to do. I think it's not so easy. That's my take on that.
Maybe I'll add to that. So how I would understand Jürgen in that regard is more that we can reuse a lot of the infrastructure components that we have today. This is how I would understand Jürgen at this point in this particular point, because what we think as well at Swire is that there is a necessity for a digital infrastructure layer, right, Markus? Like you just highlighted, that there is a lot of development still going on, right? So where there's the need for a common base layer to work on, because otherwise we're just creating silos again. And there will be no network effects, basically, and which is why we have a dedicated platform strategy about how can we achieve critical mass, can we enforce positive network effects, and indirect positive network effects. And but however, I think a key aspect is that you can leverage quite a lot of components in today's relationship between the entities while moving it on chain. Of course, relationships and responsibilities will move, right? So of course, it's a core change to the value chain and maybe value creating ecosystem, I would argue, because disintermediation is taking place. However, surprisingly, a lot of these legal relationships and responsibilities can be reused. So I would rather say, in comparison to Jürgen's statement, I would rather say that there is already a lot of awareness there and more understanding of which components we are going to be able to reuse. But on the feature side, maybe from the tech side and development side, I would say there's still a lot of development and work in progress. And I think we're just about seeing the peak of what is possible and the very first steps towards production. Right? And because production grade in financial infrastructure and financial services is totally a different topic to all those POCs that we have seen in the past.
I would strongly agree to Jonathan. We at Hardstocks always try to look at efficient markets, and the market is efficient if the new world product is better than the old world product. And in our current status, our infrastructure and our framework is okay. The framework is getting better and better. But to have an efficient market, you need a lot of players on the market. And right now, there are only very few players. And all the startups that produce, or companies that produce financial products on a DLT basis, have to rely on these few players, and they are price setters or price makers, not price takers, because the market is very in the early steps and is not very efficient right now. And so in the end of the day, you see a lot of products on the market using DLT, which are not better than the old world products. So I would say, of course, right now, in the meantime, we have a lot of possibilities and structuring possibilities on the product side and also on the infrastructure side. But the important players in the mass of the institutions that provide the market, or the market is based on, didn't move to the DLT space. And so the efficiency on the market isn't there. The possibilities are there, but the efficiency isn't on the market. The prices are quite high. And if you compare a new world DLT product in terms of structuring an asset, or in terms of transaction costs or something else, costs for wallet and so on, the costs in the meantime are still higher and the efficiency is lower compared to an old world product. And we at Hardstocks, we always try to say you have to be able to look at the old world and the new world, and only if the new world product is better than the old world product, you have made any progress. And the progress on the market isn't there. We tried to get there, and the steps are quite good. The framework is getting better and better, but the market yet isn't efficient, and you have just quite a few players that produce solutions that have any add-on to the old market potentials. And so I would say, yes, the framework is there, but the use cases are just very few.
Yeah, I would maybe add to that. I mean, I think it's a really good point, because, like, okay, in the first part, you say, okay, this is like financial assets. We already know how a bond looks like, and we just integrate it, and that's it, and check mark. But the thing is, like, there's so many opportunities, like, mentioned, like, you can do so much more. For instance, if you're going like public, I mean, you can connect with other use cases. You can even go from a regulatory point and change regulatory reporting completely, because I would say it's a pain for most banks, because, like, it's a kind of push strategy where you have to push something to the regulator. Hey, why not pulling it? I mean, just doing the other way around makes things so much cheaper. Same things holds, like, for market data, for evaluations, because, like, when the mechanics is just exposed, and other providers, or other fintechs can see how the mechanics of a product is. I mean, they can probably offer valuation services and all these things. So I think there's a lot of potential. And the other thing is, like, if you share processes, I mean, you can really streamline things and make the product much, much better. So I think there's a lot of opportunity and a lot of innovation potential. Surely, I mean, the first step is, like, okay, just doing kind of migration. You're just, like, doing the same bond as we have done before, just on your infrastructure, make cost a little bit more efficient. But I don't think it's the whole story. So there's much more, say, down the road.
Like, if I can answer on this, yes, you are right. If we use the old infrastructure, we do not use the full potential. We cannot use smart contracts, as you pointed out before. And as I said, we can integrate these products right now, but not with the full potential, and it is not fully efficient. We are going to have more efficiency later on. If we have more of these digital assets in the system, it will not be enough to just integrate it into the old world. We have to have changes there that allow us to use the opportunities given with these new products, these digital assets.
Mm-hmm. Super interesting. So now we spoke already about bot secure and status. Jürgen, maybe you can give us some insights. What are requirements? What are obstacles? If you would like to outline those a little bit more, so that maybe the viewer who's now taking a look at our panel discussion really understands what are really the obstacles in the moment.
I think there are several points that are hindering the banks to go into digital assets. One is you have to have the data to access to the data to manage, settle, and report of all these assets. You can find it in all the blockchains, yes, but then you have to connect to all of them. Normally, the banks are used to have 1 or 2 access points to get access to the data they need. And they cannot process anything if they don't have the right data behind. Another thing is that the functioning and liquidity of secondary markets. You have to have the ability to disinvest, to sell the product you have bought before. And we don't have this possibility right now. It is growing with the DLT pilot regime and so on, but it's not really there. A third point is you have to have secure and performant infrastructure so that you can have high transaction volumes and transaction rates, and you can have this at quite low costs. And these are points that are not given right now as far as I can see.
Mm-hmm. Marcus, you heard the points. Would you like to highlight one, or would you add a new one? What are maybe the main points in your view?
I mean, the main points I'm seeing is, I mean, I'm looking more on the public side. Maybe it's a little different. I mean, surely there are some solutions on, say, permission private networks. So you can tackle some stuff much easier. But we also saw some players in the market which trying to go public or both. I mean, there's different kind of combinations. But going on the public side, I saw on projects there's a lot of really tough challenges you have to solve because, for instance, like the privacy issue. So you have to really look into privacy because nobody wants to expose its portfolio or its holding or its transactions. So you have to really look into privacy solutions. And there's a really recent kind of technological development you can use, but they are in a kind of really early stage, and you really have to think around the box. But I would say there's solutions, but you're in a really early stage. The other thing is what Jürgen mentioned is all these scaling and scaling problems you have, and we saw with one of the issues this was on Polygon because, like, it's an L2 layer, things much faster, and that's probably the way you would go. But I wouldn't say it's really kind of hindering in the beginning because, I mean, also the change involved, they're not static, so there's continuous progress. And where I see big problems is like this thing that we have a decentralized, when you're going public, you have this kind of decentralized, entities. So you have this network, and you have no control over this. You can have unwanted parties, you can have protocol issues. So you have to change. I mean, you have to change your notion of say PCM, for instance. Like what is like business continuity management with such a thing, because they don't have an SLA. So you have to really adjust your processes. You have to create really complicated PCM strategies. And you have maybe even to monitor the system because there's no information you're getting from it. You have to monitor kind of social channels and all these things. So it makes things more complicated. But I will say there's all things which to solve which are pretty new. And if you go down a new road, I mean, you have to solve it. And I think also simple stuff like unwanted parties. I mean, I think from a legal perspective, you probably can solve that. I mean, a lot of institutions I work with, they have this problem with that, and they say, okay, hey, I can control the nodes, but I think in a legal perspective, there should be a solution for that.
Maybe Marcel, if that's okay, I'll just add to that because I really love the way how Marcus pointed this out. That is in a question actually of how can I use blockchain when I have no legal relationship kind of right to the entity that is kind of providing, or those entities providing to me the runtime environment and the reliability, right? So that's actually a difficult question. And from my point of view as well, comparable to other new technology questions that we had arising around the cloud adoption, right? Where you say, okay, but which server is now my data, etc. Of course, this was a different area, but it really highlighted why we are active as Swired in the space, because our drive is to provide financial entities with a blockchain network that has always a clear picture on the responsibilities, on who is responsible for what, and that I always know who to address. We do this by having a permission network, right? So there is a permissioning layer in, so that we as well ensure that there are only regulated entities contributing to the network and are participating in the network. And we, from our point of view, are contributing to holistic financial infrastructure for regulated entities, which you can compare to Web3 version, right? Because you have this interoperability feature between different decentralized applications that is truly necessary to truly scale. Because nowadays you have, as I mentioned, these silos and islands, right? That no one is cooperating with the other entity. And which is exactly the reason why Swired is only the software provider in that case, right? And says, okay, just take the software from us and run your own node. Right, so you're relying on yourself, right, for your data, and are contributing as well to the financial institution of networks, right, networks of financial institutions that way around, and thereby creating your own reliable infrastructure. And the true strategic question behind it, as well, coming back to the original question, this is kind of what is missing, or what is the aspect, is kind of what we see from a strategy point of view is the status quo is undesirable for any actor within the value chain currently, because there is basically exclusively horizontal competition. If you're a bank, you're competing with other banks. If you're an infrastructure provider, you're competing with other infrastructure providers. And because of regulation, there is no vertical competition, right? So the infrastructure provider, if they want to attack a bank, right, from a strategic point of view, it's difficult. And now incoming with the new regulation, and as well changes like the DLT pilot regime, right, where disintermediation is as well being embraced, right, and as well there's a political will to explore how this could look, how a changed infrastructure could look like. They're opening the gates in both directions, right? So strategically, you would say that a vertical forward integration is possible by infrastructure providers, basically attacking the customer interface, attacking as well the role and responsibilities of banks. And there's the possibility of vertical backward integration, so that banks that own currently the customer interface, right, or entities that own the customer interface currently start attacking infrastructure providers because they could start using blockchain, right? And from our point of view, a lot of financial institutions have not clarified their opinion on these scenarios yet, and are still about to gather this holistic picture on how the future could look like from their point of view. But, and maybe to conclude, yeah, we think that as a result, the status quo is undesirable for anyone, because for both entities, for infrastructure providers or entity groups, for infrastructure providers, as well as for banks or entities that own the customer interface, there could be the potential for more parts of the cake, right? For owning more parts of the value chain. And hence there is this battle now going on the infrastructure layer. And it's interesting to see whether the infrastructure providers will manage to attack the customer interface, or if the customer interface owners will collaborate on the infrastructure layer to compete still horizontally about the other customers.
Super interesting. I think that's shows how much development is going on and how much disruption as well. Let's speak about the investor side. Enno, can you give us some insights? I think you already said a really important sentence or phrase, the product has to be better. So the client has to be happier with it. So can you outline those points a little bit more?
Yes, I would love to. So in the first step, we have to summarize two different groups of investors. We have the private investors and we have the professional investors. I think right now blockchain offers to a private investor a lot of possibilities because he gets the opportunity to invest in assets and financial products he wasn't able to invest before. So right now we see quite a good adoption on the retail customer market in terms of tokenized products. But the retail market isn't the interesting market when we look at the financial market, because the most value is created in the institutional market. And so we have to look into the institutional market and what is happening there and why didn't the adoption start over there. So the retail investor already uses DLT products, but the institutional investor does not use a lot of DLT products. I mean, we saw, for example, Siemens, who issued like a 60 million bond, but in the same time, they issued like more than 2 billion euros in a traditional way. So they just start using DLT products. And this has a really clear reason. As I already told, in the financial market, we look on efficiencies, and the efficiencies are measured in costs. And in the end, if the costs are higher using a DLT-based product, or is it way more complex to use a DLT-based product, you won't use it. And as long as the big players in the market don't adapt to the space, and we have more competition, to be honest, Jonathan, during banks or between banks and during institutional infrastructure providers, the prices will be as high as they are right now. And so the product publishers, as we are at Hardstocks, for example, have just very few opportunities to produce products that are more efficient than the traditional market. So it's not like you always say, okay, in a few years, blockchain products will be like 100% of the market. It won't be, because right now we just have the opportunity to go into markets that are quite inefficient and that are just a few like branches or very few interesting fields that DLT makes sense right now, and where the prices are as good, or in the traditional world as bad as they are right now, that the blockchain world and the blockchain efficiencies can gain any efficiency gains and cost efficiencies. So in the end, I would say it's quite a logic field to be in the financial market and to be a professional investors, and they want efficient products, and you have to provide these efficient products. And doing that, we rely on the infrastructure, and to bring that forward, we need more competition on the market. And I always say it, we need to bring the big institutions into that field, and we need to have better prices. We need to be price makers and not price takers as product publishers.
Thanks a lot. I can see we have already a lot of questions in the chat. So maybe for the audience, what is really important, you can ask questions and we will answer them at the end. Because of that, before we go to the questions, I would like to ask maybe one open question again. Let us finally talk about strategy and maybe an outlook in the next couple, 1 and 2 years. Would like to start maybe, what is your personal outlook? What do you see? Maybe what's the strategy of your company, or is the strategy you are seeing in the market? Markus, would you like to start?
Yes, I mean, I can only speak like, because we don't have a product in this sense. So just like speaking about the project I'm observing and I'm participating. So what I'm seeing is like, I mean, what I mentioned before is that, I mean, say financial institutes, they make the first step, say into the space of digital assets, like existing assets, like, you know, just take cryptocurrencies, do it really simple, and just use it like as a seed to build infrastructure. So they first start like with the custodian, think about key management, all these things. And then the next steps are like, okay, build stuff on top on that, you know, going in the direction of crypto trading. And because you have already the custodian, you can build just the next step, say upstream. And now we see also like, okay, they think about like, okay, you can build now a crypto security register. I mean, it's not a really sexy business, but I mean, it's something I think which is really important in the market. It's a new role. But you can leverage, say, infrastructure you already have built, like with the crypto custodian. You can merge these two things, and so you don't have this high bill of like building all these services, because you already have something, say, in house. So this is just the next step. And in between, they're looking into the direction of like, say, looking into the DeFi space, but more like on, I would say, like proof of stake, like staking rewards. So this is also a really important topic, and trying also to expand on the asset side. So going a bit from the cryptocurrencies, going to tokens, because you prepare yourself for crypto securities, because they assume it will be probably something like ERT20 plus whatever will be on top of that, and you will be prepared for that. So they're trying to build infrastructure and exploring all this new role by going step by step by step. And I think this unfortunately takes a lot of time, because you have to also integrate with all these existing processes you already have in your institution, like all this back office process, all the compliance processes. And this is my experience. This almost takes really a lot of time. So it's less just building up things.
Thanks a lot. Enno, would you like to go next?
Yes, I would like to. And I think there are a few interesting years ahead of us. And maybe at first look back a few years ago when the industry started, everyone told in the next 5 years it will be groundbreaking, and it wasn't. So we already told that the infrastructure was failing, the framework was missing, and a lot of stuff just wasn't there that we needed to provide good products, a good infrastructure, and an efficient market based on DLT. Right now, we have the framework. We have like the EVPG, we have the pilot regime, we have the future financing law, and there is a lot going on in the market with MiCA and everything else. So the framework for the first time is there or will be there in the upcoming years. So right now, all the possibilities are on the market. The framework is there. And now, I repeat myself, we need the institutions to go there. I think there are a lot of good ideas using DLT, but we need the infrastructure that we can provide good products. So I hope that we will see even more traditional players, traditional institutions, and traditional infrastructure providers that go into the market, see the business case, and invest in that business case and start growing into the DLT business. If they will do, the market will be successful, and also a lot of players get the opportunity to bring good products on the market, to make progress and to make this market more efficient. And these years, they will be quite important, because right now there isn't an excuse anymore. In the last years, we always heard excuses why the market isn't succeeding and why we don't go forward. Right now, the framework is there. So I hope that we will see a lot of good players moving forward, prices getting lower, products getting more efficient, and so the market getting more successful.
Thanks a lot. Jürgen, what's your point of view, and what's the point of view of WM Group?
Yes, I think the markets will move on, and markets will come closer together. It will not be traditional business and digital ecosystem, and that's where we look at WM Datenservice. We think we can help to bridge the gap between both worlds, serving in our function as a data service provider, data that are needed on both sides. The traditional financial world is working with an akin, for instance, and there is no akin for the most tokens, or there was not. We at WM Datenservice allocated akins to the most popular cryptocurrencies. akin has to be allocated to crypto securities according to the German EWPG, the Electronic Securities Act. So we are bridging the gap together with ITSA, the International Token Standardization Association. We also created a product that is putting both worlds together, the level of the token, where you have several tokens, maybe for Tether, and we bridge the gap from the token level to the asset level, where it's one asset, it has one akin. So there are different things we think we can do to bridge this gaps and help with the adoption of digital assets.
Thanks a lot. And Jonathan.
Yeah, so I personally think that within the next 2 years, what we will see is kind of like the first tipping points that in mass adoption, I would say. Because now considering that the DLT pilot regime has come into play, right, for securities, I agree totally with Enno that there is no excuse anymore. Right, so there's everything in place. At least in Germany and other European jurisdictions, there's still partially the national law missing, but this is incoming, right? Because the DLT pilot regime basically puts the pressure on the politics side for those jurisdictions as well. And what we will see, for example, in Germany, is what we assume is that the driving forces will be as well with the crypto registrars. Even though the business itself might appear a little bit unspectacular, maybe, right? It's crucial because they basically enable the digital securities market. Without them, there will be no digital crypto securities. And we as Swiat provide an environment and want to embrace that different registrars come on to the platform and jointly work in the same environment, because then their customers benefit from each other, that they have as well other registrars bringing on those crypto securities. So what we definitely will see is kind of consolidation, not of entities, but of platforms, right? So the first hints of this mass adoption consolidation will take place. For now, everyone started its own POC, its own environment to get this license up and running, right? Even though it's just a temporary one, but I'm convinced that there will be a lot of conversion, quite a good conversion rate to a permanent license in Germany, considering the players that are in the market. And I think a collaboration between those entities will drive a lot of adoption. So assuming that in 2 years that we are there in a broad mass adoption environment and that it's already scaled, that's not realistic. But I think we will be able to see those tipping points, considering DLT pilot regime and the crypto registrar software. And one last element that is definitely contributing to that factor is as well, I assume that the BaFin will have its process more streamlined for understanding crypto registries, because for the time being, it's difficult to get this license if you have not the temporary license. And yeah, what we basically do at Swiat is provide entities with the software to take it and to apply for the license and be in this Swiat network where other financial entities are, and start running basically on DLT.
Thanks a lot. Thanks a lot to all of you. I already took a look into the chat, and I think one point the audience is really interested is law regulation, and specifically regulation if you compare it with different kind of countries. For example, Germany in comparison to UK or the United States. Do you see an advantage? Is it our chance to move on and to have maybe a faster speed than other areas on the road? So would like
so
to.
I think you touched like a point where we all are not quite familiar with. I think we all know very well the European, especially the German law, but UK and US is quite difficult. I know, for example, that the US has 52 different financial laws for the 52 states. So there are a few states that are working quite well with DLT and blockchain, but there are a lot of states that aren't. So it's quite difficult to say where the other countries stay. I see a lot of big players on both markets, for example, UK and also US, to start moving into that market. For example, one of the biggest private equity funds, KKR, announced like 6 months ago that they will publish an DLT-based private equity fund in the US. So I think the other restrictions also start moving into that direction. And we shouldn't sleep. For example, that that in Asia and, for example, Dubai, there are a lot of startups and a lot of enterprises coming up already. And there's a big crypto hub, for example. I would say that the European and especially German law is quite good. The European law in general, for example, also Liechtenstein or Switzerland, have quite good frameworks to use DLT. And we are not in the best position, but also not in the worst position. And it depends on the companies in these jurisdictions to use the framework that is set to bring the place forward and to bring the economy forward. So as I said, it's one place, on the one part is the framework, and I guess the frameworks and the other companies, as Jonathan said, will also follow up and also will start bringing up the possibilities to use DLT. And on the other hand, it's the companies registered in place in that area, use the framework, and the one that is adopting as fastest will be the front runner, and we shouldn't get sleepy on it and continue moving forward into the DLT space. And it's on our shoulders to use the framework and to bring the space forward.
Mm-hmm. One other question is going into the borrowing and lending area. Marcus, I think you mentioned Polygon, for example, as a second layer solution, and more like the open source blockchain solutions, where we have, of course, DeFi, and then, of course, we have the CeFi Blaze. Do you see an opportunity there for borrowing and lending in that area in combination?
Yeah, there's a problem like when you're looking into crypto securities. I mean, you have transfer restrictions. I think it's not that simple. I mean, if you look EH20, probably yes, you can envision something like that. But the problem is like you have the registrar, and if you want to change ownership somehow, I mean, you have to do this kind of. You have to think about your transfer restriction, and then you have to connect the DeFi world with the registry. So this can be kind of complicated. But I think that you can use probably as a collateral or something like that. I mean, I think there's probably other use cases here you can use. I think what was mentioned is I think it's a little bit too tricky, but why not? I mean, but you have to think about it.
I guess it's depends truly on the asset that you want to lend on.
Yes.
Right? If you're just in the free, say a digital DLT world, right? Not the security reference, I would argue, then it might be the case as you just described, Marcus. But I think if you're looking on securities lending and borrowing, right, like we know it from the traditional world, this is of course an interesting asset and a business model, right? That we receive quite a lot of interest in. I mean, as Swired, when we started, we working on the concepts that later became Swired, we started as a team at Decker Bank, right? And the very first transactions that we did were to settle traditional securities on chain in sec lending. So when I hear lending and borrowing, of course, I'm getting triggered. This is actually currently a solution that we are still as well now refactoring, basically, to provide not only the traditional securities in lending space, but as well that you can reuse now the crypto security software, right? And that it's already connected or easy to connect to the crypto's lending environment that we have for securities set up, so that you actually can move both traditional securities and digital securities. So I guess the question left a lot of room for answers depending on the asset that you want to talk about.
I think lending in our space or using some tokens as collateral, since FTX, it could be more dangerous and more complicated than before, because they were quite creative. What is an asset and what could be used as collateral? So I think lending and borrowing and using collaterals in our space is a bit more different this year than it was in the last.
Mm-hmm. Thanks a lot. There was one more question asking in the direction of physical assets. What kind of solutions are there? I think, Enno, that's maybe a good question for you.
I think the blockchain is a perfect match, or tokenization is a perfect match for physical assets. Before, you always just had the possibility to have the unit size of one, and now the blockchain enables you to produce like 100,000 millions or whatever units of an individual asset. So using blockchain to transform a physical asset or traditional asset into a financial product on the blockchain is one of the most plain vanilla use cases, how to use the blockchain and where it can gain efficiencies and where it can provide you with the possibility to do something that you wasn't able before. And I would say it's also a use case that is adapted quite well on the market. You see a lot of players, not only hard stocks, but a lot of players that tokenize real world assets and physical assets and transform them into digital securities. And I think that is one of the fastest growing and also fastest adapting parts of the market.
Mhm. Yeah, there was one more question, I think, but in the same direction, like managing physical and digital assets in one wallet. To do that, let's see. Maybe the last question. Last question is the know-how in this area. How is know-how developing in that area? Markus, maybe you can answer that really quick. The clients you have or the clients you're talking to, how has it changed maybe in the last 2 years from a know-how perspective?
Yeah. So this is definitely increasing. This is what I really sense. So like 5 years ago, I mean, everybody asked about, okay, what is blockchain, what is Bitcoin? And there was a lot of interesting questions. And I think now, 5 years later, the understanding is really there. So when I'm now facing clients, I mean, I have the feeling, okay, they're really prepared. They know the space. They're also really deep into technology. And I'm really impressed by that, because like 5 years is a really short time. I think my first encounters was always was really high level. Now I can go with the clients in really, really kind of deep technical discussions, and they even understand cryptography. I mean, I would say cryptography is something like, when you look back, it's something more for, say, kind of nerds here, but now people speaking about it. It's really funny for me. So, and I really enjoy that.
Mm-hmm. Thanks a lot. So now we are at the end of our session. Thanks a lot to the audience. And now I would like to give you, each of you, the opportunity for a final statement, maybe short summary of today's panel discussion, and then we will end it. Jonathan, would you like to start?
Sure, I can start. So I guess what we noticed as well today is that mass adoption is still waiting, or is still yet to come, maybe better to say. Right, and we have seen that there are different ways on working on it, and there are different possibilities how this can be achieved. But basically, from our point of view, there are 3 key ingredients that are required for mass adoption. It's basically scalability of the solution, interoperability with other solutions, and regulatory conformity. And these key ingredients have to be there regardless of the technology you use or the software you implement, etc., etc. And without these ingredients, we at Swired are convinced that we will stay at having silos, and we will keep having inefficient DLT environments, as Enno called them. And these 3 ingredients are key, and we will see how these 3 ingredients are used in the context of strategic change, if it's going to be a vertical forward adoption from infrastructure providers to customers, or if it's going to be a vertical backward integration from customer interface owners running their own DLT network.
Mm-hmm. Thanks a lot. Jürgen, your final statement?
Yes, I think Jonathan mentioned some good points. Just can add that I see also a growing adoption of this digital assets, and we see the German law on digital securities, so it's evolving. But as I said before, we are really lacking secondary markets which have a lot of liquidity, and the DLT pilot is a starting point, but it is lasting 6 years in the end with thresholds and so on. I think we must have a massive improvement and movement on that point, so that we in the end have a good adoption. Many other points are there, but I think we have to have improvements in secondary markets.
Thanks a lot. Markus?
I think as Eno mentioned before, we have the framework. Everything is like said, and now it's really time to run. To really build something. I think there's a lot of really great ideas flowing around, and we can get more agnostic to the technology and now really focus on really good products, really streamlined processes. And I think this is the way we have to go, and we have to do it really quickly. From my side, maybe I think you're the next.
Okay, last but not least. We talked a lot about what is missing and that there isn't the mass adoption, and I would like to have a contrary standpoint right now in my final statement, and I would say there are a few companies already on the market that provide good financial products, that provide good structuring vehicles, that provide good financial services on the market already. They use the frameworks in a very clever way. They search the best parts, bring them together, and produce good financial products that work already, that are already better than the traditional capital market products. So keep an open eye on the market, look at the products with a precise overview, and get the products that are for you already right now interesting. Check the market, the players are there, the framework is there, and already the first few players produce working and good and even better financial products. Have an eye open, they're already there. And thank you for attending today.
Thanks a lot to all of you, and thanks a lot to the audience for listening. And yeah, of course, then see you in the next panel discussion.
Thank you.
Bye-bye.
Hey guys, bye-bye.
Bye.